Welcome to the April 2023 Japan headlines and commentary. So this first item starts with last fiscal year, which ends March 31st for Japan. The utilities lost records amounts of money. So naturally, in February, they applied for significant rate increases, sometimes as high as 45%. A major pushback from Prime Minister Kishida and the Diet, plus somewhat lower wholesale prices in the spot market, resulted in those rate increases still being approved, but at much lower levels. Which leads to the second item, the lower wholesale market, primarily JEPIC spot, somewhat futures, etc., has now made retail more viable as they can now sell for below tariff and save customers money, which is what customers ultimately want, either saving or price assurance, one or the other. Which leads to the third item, sort of in a series here. Now that customers have had the price shock of the rate increase from the utilities, there's more shopping, which makes retail more viable. But also the retailers, some of them, not most of them, just a few of them, are offering market-based pricing. By that, I mean 1 year fixed, where they're using futures to hedge, or block index. Some of the things we see in all the other markets in the world are starting to occur in Japan. Now, I've talked a bit over the last several months about the GX League of the 600 largest corporates in Japan, all committing to carbon reductions, plus Japan's carbon neutral 2050, carbon zero 2050 law. So the corporates are now realizing they're going to have to reduce carbon. You can only do so much with on-site solar or energy efficiency. So the interest level in off-site PPAs for renewable has cranked up. We ran a webinar a couple of weeks ago. 130 corporates showed up to listen in to see how this all works. So that market's cranking up. So last month, the utilities, 4 of them anyway, were fined significant amounts of money for collusion where they had agreed to not sell in each other's territory. So for example, Kyushu would not sell in Kansai, Kansai would not sell in TEPCO, etc. So besides the major league fines, we're talking many millions of dollars. There's considerable talk about forcing the separation of the business units, because many of those have the generation and retail in the same business unit. So now there's serious talk about separating those. A lot of interest by the corporates in PPAs. However, onshore wind and solar has pretty well stalled out. There's not much new development. Most of those developers are in the medium to small size. They needed the feed-in tariff to finance the projects. Feed-in premium does not provide that long-term fixed price that project finance people like. So between lack of ability to finance and most of the good sites are gone, onshore is pretty well stalled out. On the other hand, time shifting the sale of power using a battery from mid-afternoon, when the prices in certain markets, Kyushu and Hokkaido, currently more coming, are down in the next to nothing range. Still not negative, but call it 1 yen, which is less than a penny. So now the strategy that we see in California and other parts of the US, where you're time shifting with storage to sell power in later hours and recharge during the afternoon, that now works. Typically April 1st, you see a lot of announcements of executive leadership changes. Due to the massive losses of money in the last year by utilities and others, as well as the collusion, the number of changes at the president and executive level, et cetera, has probably reached an all-time record. I haven't actually researched it, but the number of announcements of leadership changes is, incredibly high. So there's no doubt, just like all the other countries doing offshore wind, a lot of transmission is needed, not just to bring offshore wind onshore, but also to do more connecting between utilities, which in the historically were built as kind of 9 islands, 9 utilities within each other. So they not only need cross utility transmission, they need offshore to onshore transmission. how they're going to pay for it's a big dilemma. So it's interesting, when I was in Japan last week and I was meeting with several regulators, METI, and they had finally come to the realization that the spot market was going to remain volatile, which was not shocking to anybody else in the world, but seemed to be a realization that it wasn't going to go back to the way it used to be ever. So that's good news from a regulatory standpoint, and they now get it. They're not trying to overmanage to make sure it goes back to normal, because it's not going to happen. Well, that's it for April. Thanks for watching.